The best stock market strategy. David Jaffe with BestStockStrategy.com, and in this video you're going to learn the absolute best stock market strategy. Remember, less is more, and some of the things that I say in this video are probably going to be very surprising to you, and I completely accept that many viewers of this video are going to reject my suggestions. But the only thing that I would ask is, if you disagree with what I say, at least keep it in consideration and keep it in the back of your mind so that in the future you will be able to execute and trade the way that I suggest. So even right now, if you don't believe that the way that I suggest is the best way for you, then please keep it in the back of your mind, because in the future you might have a change of heart and you might change your mind. One of the most important things is for everyone to assume that nobody knows anything. All of the people that you watch on YouTube, all of the articles that you read, all of the people and the talking heads on CNBC, it is best to assume that they don't know anything more than you, because virtually all of the publicly available information is already reflected in the current market price of the specific stock. So by you actually accepting that nobody knows anything, that is going to substantially increase the amount of time that you have to dedicate towards things that are more enjoyable. So to summarize this point, do not consume any media, and also assume that nobody knows anything. This is one of the most important aspects of the best stock market trading strategy. And this might be the reason why this video could be the only stock market trading video that you ever have to watch, because it will provide you with the best trading strategy. So you're not going to have to watch YouTube videos or read articles or watch CNBC. The next thing is that your differentiating factor is going to be your strategy. I do definitely believe that it's important to focus on your strategy. So irrespective of what your strategy is, I believe that instead of focusing on buying the best high-flying underlying stock, instead your differentiating factor is not going to be in your stock selection, which inherently is going to be inconsistent. Sometimes you'll have winners, sometimes you'll have losers. But the best way to earn alpha and to achieve incredible returns is going to be focusing on your strategy selection. Because your strategy is going to be your differentiating factor, you want to make sure that every trade that you make has a positive expected outcome. As a result, I personally do not try to guess direction, although I would say that in my trading, I tend to be long biased because I sell put options more than I sell call options, although recently I've pretty much been selling about 60% put options and 40% call options, but I still have a long bias. However, overall, I do think it's better to not be overly directional and to not just buy Tesla shares and hope and pray that it's going to continue going up, or not buy Amazon and hope and pray that it's going to continue going up. You need some sort of hedge just in case Amazon or this overall stock market corrects by 10 or 20 or even 30%. You want to make sure that in all market environments, you are going to beat the market. And in my opinion, the best way of doing that is to focus on your strategy selection, and that is going to be your differentiating factor. As a result, in my opinion, the best stock market trading strategy is to sell options. And the reason is that when you sell options, every single trade that you make has a positive expected outcome. And the reason is that when you sell option premium, the expected volatility is almost always more than the actual volatility. Option sellers only lose money when the actual volatility, which means when the actual move of the underlying stock, is more than the expected move. when you make sure that you protect yourself from outlier moves, you can make around 30 to 40% a year with minimum portfolio volatility. Now, I know that a lot of people have a YOLO type mindset where they're going to try to turn like $200 or $2,000 into $1 million. But the likelihood of you actually accomplishing this is very low. Additionally, the pain that you're going to experience from losing money and the stress that you're going to endure from the highs of making money to the lows of losing money are simply not worth it. And the more experience that you gain, the more you're going to realize that minimizing your overall portfolio volatility is a major contributing factor to the success of the strategy that you choose. Additionally, if you're able to minimize the portfolio volatility, then you're going to have significantly more longevity to be able to compound the gains so that your account size drastically increases in size. I like to sell option premium, and specifically, I'm going to get a little bit more technical here. Now, the VIX, which is a measure of market volatility, is trading over 20. I sell naked options. When the VIX is trading under 20, then I will sell vertical credit spreads, which means that I will buy a put or a call option to hedge my short put or call options. This protects me against outlier moves and it protects me against black swan events. Building off some of the first recommendations that I made in this video, I only sell option premium on market leading large cap underlyings like Amazon or Tesla or Microsoft or JP Morgan or Visa or MasterCard or Disney or McDonald's. I ignore everything else. In fact, on my watch list, I only have 13 securities. Occasionally, I will sell call options on underlyings that are not on my watch list that I believe represent good trading opportunities because they might be overbought. But in general, my core positions are only going to be established on the 13 stocks that are on my watch list. And I think I rattled off about 8 or 9 of them just 30 to 45 seconds ago. If you are not interested in selling option premium, which many people who sell option premium end up winning over 95% of their trades. Now, your win rate at over 95% is incredible. Try accomplishing that same win rate when you trade other strategies. The reason why we can accomplish such a high win rate is because the expected outcome of every single trade that we make when we sell option premium is positive. However, if you're not ready to sell option premium, then the best strategy that's going to provide you with the best bang for your buck is to simply buy the S&P 500 or buy a large cap stock that you believe in, like Amazon or Tesla or Facebook, and then sell short dated 2 to 3 week out expiration covered calls against that position. By selling the covered call against that position, you'll be able to generate an incremental 8 to 12% a year, depending upon the strikes that you select. And when you factor in the overall historical price appreciation of the S&P 500 or Amazon or Tesla or Facebook, you should be able to generate around 15 to 20% a year when you also factor in the increased income that you're going to generate from selling the covered calls. David Jaffe with BestStockStrategy.com, and I hope in this video I've been able to communicate to you the simplest and the most effective and time-efficient way to trade the stock market and to achieve large returns and alpha in the stock market without having to take unnecessary risk. You can visit BestStockStrategy.com to receive over $400 worth of valuable free options trading materials. Please leave a comment below and let me know your thoughts on this video regarding the best stock market trading strategy that you have come across, and I appreciate your attention.